Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, can Dutch Bros brew up steamy profits for your portfolio, or is this stock just grounded? We're going to take another look at Dutch Bros, the competitor against Starbucks, who was a regional provider of coffee in my area in the Pacific Northwest before expanding and becoming the powerhouse that it is today. My last video was in September 2021, which was very shortly after Dutch Bros with the ticker symbol BROS came public via its IPO. In this episode, I'm going to develop a buying plan of what I would do with Dutch Bros for where it is now, and then I'll go over my own investment and where it's come from my last update, as well as my plans for it in the future. As you can see, my last update was very close to when Dutch Bros came public, so there was a lot of price action after it, and Bros has proven to be an incredibly volatile stock, both hitting incredibly new highs as well as new lows. Dutch Bros bottomed in May down here at $20.05, and the impressive thing is when the market sold off again in September, you can see that Dutch Bros is nowhere near its bottom, even though the S&P 500 hit new lows. Now that doesn't mean that Dutch Bros can't hit its bottom, but it does mean that it's getting a lot more strength, and it's demonstrating that it has the ability to perform in this market environment. All that being said, it's incredibly volatile here, both in the stock and in the market itself, so being careful is important. What I would do to develop a buying plan is start by drawing a Fibonacci retracement from its low in May to its high in August, and this will provide us with levels of support, which may be buying opportunities as Dutch Bros sells off. You can see that Dutch Bros has already pulled back beyond almost all of the retracement levels, only leaving this 78.6% retracement down here at $27.35. So if I was feeling particularly aggressive, I actually might use the most recent low of this day here at $29.73 as my first buy. However, because the market is so volatile right now, I wouldn't start with my typical 50% allocation. Instead, I'd start with 25% and save the remaining 75% to make buys on the way down. After this $29.73 buy, I would look down here at the Fibonacci retracement, and you can see that there was support found below it. In fact, these 2 days here both found support around the same level at $26.08, so that would be my next buy. After that, you can see there's a pretty big gap between $26 and the low, so what I would do is to switch to a shorter time frame to find other potential levels of support. If we switch to the 15-minute time frame, you can see that we have a lot more price action, and you can also see there was significant support found above that low. So I'd probably use the low of this candle here at $21.58 as my next buy. Since that would only leave us with a 45% allocation, I would make another 10% buy at its low at $20.05, even though that's pretty close to my last buy. At this point, I'd have a 55% allocation, which sounds small, but since we're headed into a year where we don't know if there's going to be a recession, we don't know how bad it's going to be, it's really potentially possible that Dutch Bros could sell off significantly below its bottom. One of my rules is to never trust a bottom. They can always give out, so never assume you've got support there. It might actually be the low, but you won't know until it's made its move higher from there. To find additional buying levels, what we'll do is use that Fibonacci retracement that we drew, and you can see that we have 127.2% pullback at $10.77. But since that's such a significant gap from $20.05, what I would do is split the difference and create a new buying level there. And that would give us a buying target at $15.41, followed by our last buy down here at the retracement at $10.77. At this point, we would have a 75% allocation in Dutch Bros. And although that might sound small to certain viewers, because of the volatility we're in right now, I'd rather have that 25% cash on the sidelines. If Dutch Bros never sold off lower, then I would have what I'd have, and I'd take that cash and allocate it to a different stock sometime in the future. From here, let's take a look at my own position in Dutch Bros and where it's come from since our last video update. My first update of Dutch Bros was on September 20th of 2021, and I'd only made my initial buy at $42.25 at this point. And as you can see, Dutch Bros rocketed higher from that point, which actually led me to take profits. Even though I only had a small allocation at at this point, I still felt like it was prudent to take some money off the table. So I made my first sell on October 19th at $62.50, and this lowered my per share cost to $40 a share, a reduction of 5.33% from my initial buy. I did miss out on some profits here as Dutch Bros ended up rocketing to make a high in the 80s, but then it quickly sold off. So I took the opportunity December to add more to my position. I replaced the shares I sold on December 3rd at $45. Now this did raise my per share cost up to $40.50, an increase of 1.25%. I felt like this was prudent since we didn't know how far off Dutch Bros could sell. However, from here, Dutch Bros did continue to sell off, particularly with the rest of the market when Russia invaded Ukraine. Because I didn't want to raise my per share cost up anymore, I decided to wait through the entire invasion until it sold off some more, which Dutch Bros did in May. I made my next buy on May 11th at $38.40, which lowered my per share cost to $40.15, just a 0.86% reduction from my last buy. However, Dutch Bros was not done selling off at that point and just plummeted right into the 20s. So I made my next buy the day after on May 12th at $22.97, and this was a bit higher than the bottom of $20.05, but much lower than my last buy at $38. This buy lowered my per share cost 6.1% down to $37.70, and after Dutch Bros bottomed, it rocketed higher from there. When the entire market rallied off of its June lows in an incredible way and started to get frothy in early August, I was taking profits in every single one of my positions, and Dutch Bros was no exception. I sold some shares at $43.49 on August 3rd, and the reason for this is it was nearly a double from where I bought those shares on May 12th. The sale ended up lowering my per share cost 1.19% down to $37.25, which is where it is today, and as you can see, Dutch Bros sold off significantly from its high. From here, my next buy target is at $28.15, relatively close to where Dutch Bros is right now, because that is a key level of support. I also have plans to take more profits in Dutch Bros below its recent high in August, with my next sell target at $52.25. If you liked this video, please hit like and subscribe, and I'll see you in the next video.